Everybody sees these ultra-high yield ETFs paying massive weekly income and assumes the returns are impossible to sustain. But when I ran a full drip backtest on NUGY, the results were far more complicated than I expected. Because while the income numbers looked incredible, the share price behavior told a completely different story. So stay tuned while we dive into the numbers. Welcome back to Simply Money. Today we're looking at one of the newest and most aggressive income ETFs I've covered on the channel, NUGY, the GraniteShares YieldBoost Gold Miners ETF. This fund has been attracting attention because of its extremely high weekly income distributions tied to the gold mining sector. But instead of just looking at the headline yield, I wanted to answer the question most investors actually care about. What happens if you continuously reinvest the distributions? So in this video, we're going to run a full drip backtest on NUGY and look at total income generated, share growth, portfolio value changes, how the weekly payouts behaved, and whether the income appears sustainable long term. We'll also look at some other drip scenarios, and we'll discuss that ever-worrying NAV erosion. Because the ultra-high yield ETFs, the distribution is only part of the story. Now, NUGY is an actively managed ETF from GraniteShares that seeks to generate high weekly income using option strategies tied to leveraged gold miner ETFs. The fund primarily sells put options on leveraged gold miner ETFs, collects option premium income, contributes that income to shareholders weekly, maintains indirect exposure to the gold mining sector. The strategy is designed to benefit from volatility, option premiums, movement in gold mining stocks. But like many ultra-high yield option income ETFs, investors also need to watch NAV erosion, payout variability, volatility risk, and long-term sustainability. So let's dive into the worksheet. Here we have the Simply Money NUGY drip sheet. If you'd like a copy of this, they're available at the Buy Me a Coffee link in the description below. All of our sheets are available there. What we do on these sheets, for those that are new to the channel, we look at from a starting date. We're looking at the beginning of NUGY at 11/3/2025. It's a weekly paying distribution. Here's the ticker symbol. We're going with a hypothetical. What if we went an all-in scenario of $500,000? Would get 34,494 shares. And we can change this. You can change the date where you bought it. You can change the amount that you bought into it. And we can change some other things and some other calculators we'll look at in a moment. But with this, you can see that the price jumped very quickly. From November 3rd until November 25th, the price shot up. It went from $15 up to $25. Now, we're going to see how well this maintained. As you come down, you can see that it immediately started dropping again, and now we're finishing a little bit lower than where we began in November. But it's pretty flat if you look at it. It went up, and it's come back down. Gold had a huge influx, a huge run-up for a while, and then it cooled down, and it's just been flat again. We'll have to keep an eye on that. The other thing we want to look at is your payouts, your dividend distribution. Because of those premiums, look at how it was up at 47 cents, 46 cents, 45 cents, maintained in that 40-cent range, and then it slowly dropped, got into the 38-cent range, and dropping in the latest payment. This is what we start worrying about as this NAV starts coming down. See these payments decreasing. We liked it up here, but as the price comes down, you lose distribution. You have to watch that on all of these high yield and covered calls. So please do your own due diligence and know this is not financial advice. This is for informational and educational purposes only. Please do your own due diligence with this. I'm not telling you to buy NUGY or not buy it. I am just giving you the data. This is pure data, historical data. This is what it has done. This isn't hypothetical. This is exactly what it's done, what it paid on these dates, and what the share price was. But if you had this amount invested, your first payment for that week would have been $16,000. You come down because you're taking that $16,000 and you're reinvesting it in this full 100% drip. But even with fully reinvesting, your income hasn't gone up much. It's actually come down in this last one, $13,000. Now, yes, it did have a slight increase here early on, got up to $19,000 here. It was riding in that range. But then look at that, it's starting to drop again, and you're losing a little bit of your income. Now, I'm not saying that to say this is bad and this is done bad, because from November until now, you're looking at 6 months and you have grown your portfolio to $853,000, a 62% growth rate in 6 months. Now, we're going to look at a couple different things here. Now, let's look at it 50-50 drip. If I took half of the amount and I reinvested it and I kept half of the amount to live on, and so this represents half of the amount. I'd get this amount to reinvest. I'd also get the $8,140 to live on. A nice income. Each week you're getting about $8,000. It comes down, but now we're looking at about $6,000 and $5,000. But over the course of the 6 months, you've received $200,000 and your portfolio's grown $142,000. That is a total return. Look at that. Your total return is actually higher with the 50% drip. This is done really, really well. Will it sustain that? I don't know. We don't know what's going to happen, but these are funds you have to really be careful with. And that's where a lot of people, they jump in and then maybe they'll ride it for a little bit and then get out. Some funds do really well, some don't. What will happen with this? We don't know. A lot of speculation when it comes to this type of high volatility ETFs. I caution people, if you want to get into these, use a very, very small portion of your portfolio. Do not try to get rich quick. Don't try to be the rabbit, be the tortoise. Slow and steady wins the race. When financial decisions are made, be patient. Long-term time in the market is your best wealth building method. Yes, these can have a role. They can have a place, but please don't ever do an all-in scenario. We do this just so people can see the impact it could have. And again, this is a short period. You're looking at 6 months. Bear markets can last 2 years. You can have downturns that are 6 months long. You can have just corrections. All sorts of things could happen. We can have a bull market, but you got to remember, things happen in the market. It's long term. I want you to see when it peaked here. Look at this. You were at $1 million with the full drip. It has begun to come down. You're starting to lose value even while dripping over the last 4 or 5 months. Now, the last scenario we want to look at on this sheet is the zero drip, meaning we're taking all of the income. We're not reinvesting any. You can see the full drip, our share count right here. We gained almost 22,000 shares. With the 50% drip, we gained 9,600 shares. With the no drip, we started with 34,000 and we're ending with 34,000, but we're taking the income. And you can see your weekly income is very substantial, and it's dropping. As we come down here, it's about half of what it was when you began. But you've received $357,000, and your portfolio is basically flat. It's down $3,000. So in 6 months, you've received $357,000 out of that $525,000 you originally invested. And you still have $521,000 invested, and your total return is 67.5% in this time frame. You have cash that you've taken out for 6 months, and you could go ahead and sell this, and you're up $354,000, a 67% gain in 6 months. Whether people do that or not is up to you. You're going to have to play that scenario out in your brain. How would you want to work that? But let's do it like we like doing. Let's go down to $50,000. Okay, I have a $1 million portfolio. I'm going to put $50,000 into this fund and see what happens. Again, the percentages don't change. They are always the same, but for math purposes and money-wise, people like seeing that. If you did the full drip, you've gained $31,000 if you sold it. You haven't sold it, you're just unrealized gains. If you did 50% drip, you've gained $13,000 in your portfolio and you received $19,000. Okay, you're getting up here $800, down here $600, $500 a week off of a $50,000 portfolio. Now, again, the zero drip, you've lost $328, but you've received $34,000 out. If I was to have put 50 grand in this, I'd be getting a $1,500 paycheck every week. And down here, it goes down with, 1,000. This one here is a little concerning. We'll be curious to see what happens. This video will probably be out after the next distribution. So if it is, leave the comments down below. Is this gone up or down? Were we scared with this? Has it recovered some? What has happened since the recording of this video? But this is a fund, and this is where some people will be like, you know what? I'm not going to put a lot in this, but I am going to put a little bit in. I'm just going to have a small percentage of my money, and I'm going to put it in here. And okay, so I'm putting 50 grand in, and I'm generating $34,000. Now, if this continued for the next 6 months, you're looking at getting your money back within a year in cash and still being around what your balance was. Maybe a little bit lower, maybe a little bit higher. We don't know, but we don't know what's going to happen. And this right here is a little bit of a red flag. This 23 cents down from 31 cents, down from 35 cents. What are your predictions on the next one, which is probably out when you see this, and then even future ones? Leave those in the comments below. What are your thoughts on NUGY? Do you own it? Are you thinking about it? Leave the comments for the community below. Let's have a little dialogue on this one. And if you would, do me a favor, hit that like and subscribe button. It helps the channel out tremendously. I appreciate your support, and we'll see you next time on Simply Money.